Hello, this is the Chart Profit video. This from the pre-open today. We're looking at the E-mini S&P. Said this week that on Wednesday the 8-month point of control, as measured on a 30-minute basis, migrated lower to 25.82 down here. Gives us something we didn't have prior to that, which is basically a good support reference. So 25.82, and as measured on any time frame below the 30-minute, that point of control remains up here at 27.25, and that's major resistance. Significant buying, or green, marked on the profile above 25.82 would be a positive and indicate a test of this level up here. Time above that resistance up here would be a big positive. Just look here at the current hourly chart. We can see that currently we sit somewhere in the middle. If I just zoom out on the hourly chart, you can see that if I plot a halfway point from the February low to the subsequent high, comes in here, this dotted line, that's just about where we've seen the markets stall off an important low to that subsequent high. Always important level to watch. We're about 26.70, something like that. And then all of this price action here since late March taking place below that level, which is not the best place to be. So although the point of control migrated lower and we're sitting above it, there's still plenty of resistance to overcome. Price down here would be really weak. If we look at the pulse chart, still looks pretty weak. We've got the New York daily breadth in the middle here, still red. Price oscillator below zero. Has just ticked up, but much better to have this back above zero and green. And up the top here, looking at the imbalances off the profile, last imbalance was red, or significant selling. In the very minor kind of degree, you can see the high of that red day there was exceeded pretty quickly, and that's just a minor indication of strength, but we're looking at a pretty weak pulse chart right now. I've been making a point of saying in the pre-opens recently that the Ridex traders are registering little fear at the moment in this sell-off in March. The one in February saw the ratio actually decline sharply from its all-time high up here down to a 4-month low. So this is fear, often comes in at the point where you're finding a sustainable low. But the point is, at the moment, I mean, this sell-off here came pretty close to the previous low, and yet the fear factor is pretty non-existent. In the longer term, I think the worrying thing is that the retail trader, at least as indicated by the Ridex traders, may have learnt the lesson to buy the dip every dip. This is a contrarian indicator. That would be a little worrying. But having said that, we're looking here at the Lipper US fund flows. Data through this week, 4th of April, showed an outflow, a net outflow, that's equity funds including ETF, of a negative 11.6 billion. I usually show a summation of these numbers over 4 weeks. We call it the 4-week flow. That's the black line at the bottom here. And currently that's at a negative 15.2. But as I've said here, and this is in the ebook this week, however, if we look back just 3 weeks rather than the usual 4, we've seen consecutive outflows over the last 3 weeks of minus 11.6, 14.4, 9.6 billion, all large outflows. And that gives a 3-week total outflow. So over the last 3 weeks there's been a total outflow of funds of 36.6 billion. And that's the largest 3-week outflow that I have in the database. And this being a contrarian indicator. I've written quite a bit this week in the ebook regarding the exposure index. Have a read. I've said again, this is a contrarian indicator. Represents the average exposure to US equity markets reported by active money managers. Index currently at 55.57, but 1 week ago it was at 49.36. That was down here. and that's the lowest reading since February 2016 over here. So both this indicator and the previous one, both certainly registering measurable fear. This indicator goes back, I think, to 2006. You can see at the bottom I've put a Bollinger Band going through there, or my version, not the standard settings, but you can see market tends to rally when that indicator breaches the bottom of the lower Bollinger Band. I think I'm right in saying that apart from this instance here earlier in the year, every time that's happened the market was higher 6 weeks later. Finally, looking here at the public poll from AAII, just look at the Bayes percent here. It was higher this week at 36.6. That's the highest since September. And the net is a negative 4.7. That's down here, and that's a 20-week low. Quick look through the major charts. This is the spider, and the 4-month is here, 267.18. And since late March, all the price action has taken place below that level. Bulls would really want to see price back above that level at a minimum. Same thing on the Russell 2000, 153.54 is the 10-month. It's been tested. That resistance yesterday, on Thursday, has not been exceeded. Again, bulls would want to see price above that level. UK FTSE 100, a pretty good performer this week. Had a very good rally on Thursday. 18-month resistance is quite a bit higher, 74.13. Major chart to watch, and this is the major level, 68.20. Price below there, printing time below 68.20, would be, I think, a global indication of something serious. Sounds a bit dramatic, you know what I mean. Probably another leg down, that kind of thing. You can see as we're going through these charts, just referencing these levels, we're not seeing anything really constructive. This is the DAX. The 3-month is here. Has recently been resistance earlier in March, and we're still printing time below that level. I plotted the major point of control at 119 on TLT. The T-bond ETF is actually a very similar level in terms of time. Comes in at 121. So I've been saying in the pre-open that I'd really want to see time, a higher low would be better, above 121 before assuming higher for bonds here. GLD, the gold ETF, the major down here at 120.90, so in the longer term all of this price action above that level. And encouragingly, if you are a gold bull, the current price action over the last few days, couple of weeks, has been above the 4-month at 125.23. Similar picture for USO, the oil fund ETF, the major down here at 11.41. All of this price action up here above that level. And currently we're above the 4-month here. This is also in a strong price location. The dollar index is attempting another rally. It's been oscillating enough to migrate the 6-month to 89.98. We're currently just about sitting above that level. I hesitate to call it a strong price location, but we are just above that. The 8-month is here, which is resistance, and the major resistance up here. So again, all of this price action over the last 6 months below the major puts it in a weak price location. I thought the dollar index was going to test the support at 87.25, which is the half range of the 2008 low. I thought we would have seen that tested. We haven't yet. If we see price back below 89.98, the odds of that happening for me go back up. Euro FX chart, the 6-month is at 123.22, currently printing a little below that level, so in the short term a weaker price location. The pound holds its strong position, unlike the euro. 6-month is at 139.65, and we seem to have found support here late this week. As I've been saying in the pre-open, it has again probed 142.12, which is the major value area high, which is up here. Did it earlier in the year, we've done it again now. That's the value area high of a long-term distribution. Price back below that 6-month would immediately give a more bearish look to the chart, but well, let's put it this way, the more time that's spent up here, or price acceptance around that value area high, would be the next kind of bullish indication on this chart for me. Somewhat similar. They've got a level to key from here, the 4 month, 106.17, currently printing above that. Again, like the dollar index chart, if we see time spent back underneath here, would indicate a retest of this low. It's also quite possible that that 4 month could migrate. Okay, that concludes. Thank you for watching.